So in the February month, we've got 18% gain on account using the 1% risk per trade. Hello traders, this is Cris. Thank you for being here and hope you're having an amazing trading week. As you may have seen on our channel, this week is a special one for Crilex trading team because a few days ago we just passed the FTMO verification, and starting with Monday we'll be trading a 50k funded account. On that particular account, we will continue to trading the 5-minute scalping strategy, the one that made us to pass the challenge and the verification. But meantime, we are also backtesting and refining other strategies that may be used in our next challenges. Today, I am going to share with you some extra information, results, and amendments of a strategy that I've developed and backtested, which works great on major Forex pairs, but you may give also a shot on indices or gold. It's about the 30-minute strategy using the 13, 21, and 200 EMA. The first video regarding this one is on our channel. Firstly, I will do a quick recap of this strategy, and then I am going to share with you some extensive information, results, and amendments, so stay tuned until the end of this video. Also, if you find our content useful, please don't forget to like and subscribe because it means a lot to us. So again, for this strategy, we are going to use this 30 minutes time frame, the 13, 21, and 200 EMA. And first of all, when the price is below the 200 EMA, like this, we are looking only for the sales because this is a sell zone. So being in this sell zone, we have to look for the 13 EMA, the orange one, to be crossed below the 21 EMA, and then we have to wait for this retouch into these EMAs, and it actually doesn't matter if the retouch was made into the 13 EMA only, or if the retouch was made also into the 21 EMA. Okay, so having this retouch here, we will set now, we will have to wait for this candle to just close below the 13 EMA, and actually in this case is the same candle that made the retouch and closed below. So now I have to place a sell order here at the closing of this candle, stop loss 20 points above the purple EMA, the 21, so 78.98 should be fine. Okay. And for the take profit, I'm going to target a 1-to-3 risk-reward ratio. Let me just drag it here. Okay, so actually this 1-to-3 risk-reward ratio, our target was hit right here. So this is the first amendment for this strategy because on its first form, we used to target only 1 to 2.5% risk-reward ratio, but after some extensive backtesting, I found that it works better in this way too. Okay, the second important amendment for this strategy is the risk minimizing, and I have an example for you here. So, as soon as our position hits the 1 to 1.5 risk-reward ratio, the stop loss will always be moved at the break-even, like this, and we have no more risk on the table for this position. Okay, so we have to wait for the price to hit this 1.5 to 1, okay, and our target will be the 3 to 1 as we spoke before, but as soon as the price hits this level, we are going to close our risk for this position. Okay, so we have to wait for the price to hit at least this level in order to be sure that the price has already a direction, because if you move our stop loss to break even too soon, you risk to be out of the position and then the price may go to the expected direction without you. Okay, also moving the stop loss at break even helps you a lot for your final results and give you the chance to open a new position if it's the case. Not moving the stop loss at break-even after hitting the 1 to 1.5 risk-reward ratio means that until your final target is hit, you may not want to open a new position because you will have more risk on the table for the same pair, and this is not a great idea, especially if you are into a challenge where you have some strict drawdown rules. Okay, another important remark for this strategy is about the kind of retouch that is made for an entry, and I have a clear example for you here. So here we are in the buy zone, and this red candle made the retouch and closes above the 13 EMA. As per the strategy, at the close of this candle, you should open a buy, but is it right? As we can see here, this red candle fully engulfs the previous one, and it shows us some momentum to the downside. So in order for you to not be out of this position in the next candle, I suggest you to just wait for the next bullish candle in order to open a new position. In this example, we've got a happy case with a buy opened at the bottom of the red candle, but as a conclusion for the backtesting, it is a better idea to wait for confirmation, because if the trend is in your direction, the take profit will be hit even if you enter the position after the confirmation happens. Now I would like to share with you the results of the backtesting session of this strategy on AUD/USD months of January, February and March 2021. I am going to backtest the full year for this pair, and then we'll try this one also on other major pairs. I have backtested only in the day periods when I can actually trade, therefore you will find here the results from trades taken between 8 AM to 9 PM Eastern European time, so no trades taken in the Asian session, because it is quite possible for me to sleep in that time. So let me show you now the Excel sheet and the results. You will see here a simulation of a 100K account using different percentage of risk. First of all, I actually did not decide if this strategy works better using a 0.5% risk per trade or 1% risk per trade. That's why you will see these two different results here, because when I am going to use this strategy in the real market, I have to decide if I want to get these results or this one. Okay, secondly, you can see here two type of results, because first of all, you have here the win 3 to 1 without minimizing the risk, meaning that even if the position is going to 1.5 to 1 reward risk to ratio, you are not going to move your stop loss to break even. And also I have backtested here using this kind of approach, meaning that as soon as the positions were going to 1.5 to 1, the stop loss was moved to break even, and that's how we've got this column here. So you can see the results first of all for January month here, and of course the best results are using the 1% risk per trade with minimized risk. As you can see here, if you are not going to minimize risk in this month, you will get half of the results with 1% risk per trade. So this is a huge improvement for this strategy. Okay, let's see the results for the February month. This is I don't know, you can see the results are pretty similar here, because we had on the 1st of February a break even, which was a win for the first kind of approach. But I can see that this was the only type of case, so I suggest you to just stick to this approach with minimizing the risk. Okay, and let's see also the result for March. As we can see, the March month was a pretty sad one. But using the 1% risk per trade for this strategy, and again minimizing the risk, you can gain the most, I don't know, great results here, because otherwise you will be somewhere close to break even. Okay, so overall, as a conclusion, it is definitely better to use the risk minimization as soon as the position hits the 1 to 1.5 reward to risk ratio, because the percentages are nicely increased. As I said, after finishing the year of 2021 on Aussie-US dollar, I am going to backtest this strategy on other majors also. Knowing some pair characteristic, I would like to see the results for this strategy on US dollar versus Canadian dollar and also on GBP US dollar. Okay, I think that's it for today. Thank you all for watching, and please don't forget to like and subscribe to our channel. See you in our next videos, and of course, until then, trade safe and trust the process.